Good afternoon, and thank you for joining us, and welcome to another WSWA Access Craft Wine Spirits webinar. My name is Michael Bolello, and I am your host. I am also the director of WSWA Access Craft Program, now in its fourth year, and it's grown to include the best wholesaler advisors who are experts in building craft brands. We also have several craft brand representatives who are owners, operators, and ambassadors for their startup, small production wine spirit brands. And these folks are working hard, really hard, towards national distribution and brand recognition. So whether you're a brand owner and representative, a distributor, sales professional, or industry analyst, this webinar is for you. Before we get started, I am pleased to announce that Volume 3 of the WSWA Access Craft Playbook, a free resource that contains insights from the Access Craft Brand Council members, will be available for download in the coming weeks. Be sure to follow WSWA-Media on X or Wine Spirits Wholesalers of America on LinkedIn to keep up to date with this new resource and opportunities to get involved. Also, if you have questions during today's webinar, please send them to me in the chat box, and we'll get to them during the Q&A portion at the end. Today, we're really excited to feature two finance and venture capital experts in the beverage alcohol industry. So without further ado, let's meet our panel. With this, we have Kristen Bereither, based out of San Francisco, and is currently president and head of investments at Asahi Group Beverage and Innovation. Previously, Kristen was a managing director at First Bev, a private equity fund focused solely on investing in beverage space. And she's also joined following 14 years at Chalmers Sunbelt Group, today known as Breakthrough Beverage, where Kristen led corporate development. Kristen holds an MBA in strategy and finance at UCLA Anderson School of Management. Kristen also has a very robust skill set that includes marketing strategy, new business development, business strategy, marketing, competitive analysis, and more. And Kristen contributes valuable insights to the industry, and we've all enjoyed working with her. I know I've enjoyed our conversations over the last few weeks leading up to this webinar. Kristen, thank you so much for being with us today.
Thanks so much, Michael.
We also have Michael Manzo, and Michael is serving as Executive Vice President and Chief Financial Officer at Winebow. Michael Manzo started his tenure at Winebow in 2012 as Director, Strategic Development and Finance Analysis. And in 2016, became Vice President, Import Business Operations, and then in 2018, Senior Vice President, Finance and Strategy. That's quite the progression, Michael. Michael also served as an equity portfolio manager and research analyst at Aberdeen Asset Management and JP Morgan. Manzo is also a graduate of the Gabelli School of Undergraduate Business at Fordham University, where he also instructed as an adjunct professor of finance. And I would take a class from you any day of the week, my friend.
Thank you, Michael. It's good to be here.
Okay, you both have very impressive backgrounds in finance, capital raises, investments, product development. You're industry experts, no doubt. And also, I think you have a really great understanding of how the wine spirits marketplace works. So let's start with Kristen. Kristen, tell us more about what you do and how you got to where you are today.
Yeah, thank you. I'm the president and head of investment at Asahi Group Beverages and Innovation. We're a recent fund that was set up about a year ago. I should say maybe a year and a half ago. And we are minority investing in all different types of beverage companies. So really thinking about sort of over the middle to long term, what are going to be the really trending categories, how are consumers going to drink in the future, and really trying to make some interesting investments, minority investments in different startups here in the U.S.
Thank you. Very interesting. All right, Michael, tell us about your background and include your current role at Winebow.
Sure. Currently, Executive Vice President, CFO of Winebow. Winebow is about a $900 million importer and distributor of fine wine and spirits throughout the United States. We currently distribute in 18 states, 18 markets, and import in all 50 states. I've been at Winebow since May of 2012, as you're suggesting, Michael. Prior to that, I spent 12 years on Wall Street. So my path to wine and spirits was a little less traditional. As a equity research analyst at JP Morgan initially, and then Aberdeen Asset Management as a very traditional money manager.
Thanks for sharing that, Michael. Appreciate it.
Sure.
So let's level set here. Money is expensive, and that's not an understatement. And the current wine spirits marketplace has been unprecedented in many ways. And this is largely driven by the consumer affected by inflation. Albeit inflation has come down, but prices remain high as reflected in the CPI or Consumer Price Index. SipSource data showing all categories are in a historical state of flux. In fact, according to the latest available data from WSWA SipSource, total wine spirits depletions were down negative 5.52% in the 12 months ending March, with wine and spirits declining negative 8.34% and negative 2.65% respectively. And the Consumer Price Index for all goods rose to plus 3.5% by the end of March, marking the third consecutive 0.4% month-over-month increase. So what does this mean for the craft wine spirits marketplace? Quite frankly, the larger industry. And so while we have this slide up here, you'll see Michael and Kristen, any thoughts about the data here for the first quarter? We see here, obviously, in the light blue, we have wine and spirits combined. In the royal blue, if you will, the dark blue, we have wine. And then in the just off shade of other blue, we have spirits.
Yeah, I mean, I can go first if that's okay, Kristen.
Yeah, sounds great.
It's certainly been a challenging environment. That the environment has been challenging both in wine and spirits. Spirits relative to wine is outperformed, right? So if you kind of look at on a rolling 12-month basis, wine is down about 8% versus spirits down a little less than 3%, Michael, as you're alluding to. If you take out the RTDs, or that kind of cocktail category that's been, really, really exceptionally strong, spirits is actually down more like 4%. So very traditional spirits is certainly underperforming, that RTD category, which is really kind of leading that growth. We do believe it is fueled by some of that consumer weakness, kind of driven by higher cost of money, which is not only impacting the consumer, but also impacting, kind of your corporate borrower as well. So it's been challenging, and it's something that we believe is cyclical, not secular. And something that we are going to have to work through as an industry and have to kind of work through, as consumers as well.
Yeah, I might add a little bit there. Obviously, we've seen high inflation. And then if I think about just where different craft wine and spirits players are today, cost of capital, there's been a shift in that. Interest rates have gone up. So I think it's that has definitely been a little bit of a challenge, to say the least. But if I really look big picture, and I pull up from sort of where we came from a few years ago to where we are today, I think we've actually seen consumers drinking across all different types of categories, in new ways, in new occasions. I think we've also seen an explosion of single serve, which is kind of interesting to see in wine and spirits. I think it's made it accessible for people to have a really great beverage, and maybe just have one on an occasion, maybe not be buying per se, let's say, a full bottle. So I think that's actually provided some kind of unique access right now for different players in the industry looking for unique products. So I do see that single serve as being something that's really different, and a real opportunity as we go forward across the industry too. The last one is, I'm just going to share, I do think people really care about how their products are made, what goes into their products. I really think people do care about the quality of the products that they're drinking, and are drinking premium products, maybe having one, maybe, drinking more often, but not necessarily so much in any single occasion. I think they're also moderating. So I think there's some interesting opportunities too, when you think about lower ABV products, no ABV products as well in some of our categories, and how those play out.
Yeah, Kristen and Michael, you both bring up a really interesting point, right? This is all being driven by the consumer. But when we look at the marketplace, even over the last, 3 or 4 years, I've been in the industry now for just under 6. The both of you collectively have a lot of experience. Are there so many options and there's so many things to choose from in the market that combined with economic conditions has sort of diluted some of the numbers for respective categories?
I don't know if I would say that I don't know if they're saying there's too many. I mean, there's certainly enough product, right? I mean, there's certainly enough product, and I think that over time, some of that product will consolidate, especially in some of those hotter categories, as it always does. There's certainly enough product. I'm not really quite sure I would say too much.
I still see really incredible products and a lot of innovation in all spaces, just as an aside. So I've seen a lot of non-traditional plans that people have put forward to us, which I think are quite interesting. So I still think there's incredible innovation. There's new ways to bring your products to market. I think, going back to package and some product innovation, we've seen people making cocktails with Prosecco. Right? If I think back historically, you didn't see spritz. You didn't see the concept of spritz and that concept of what is that occasion as we go forward. So I still think there's a lot of opportunity for innovation. And I think we've seen that, if you even think back to things like hard seltzer and the growth of hard seltzer out of, what felt a little like nowhere for a lot of people. I think that's a sign that, our consumer really is looking for different types of products, and really branching out in terms of how they consume different beverages.
Yeah, and then with this slide, while it's still up here, thinking, how this impacts wine differently than it does spirits, in the first quarter in terms of not only depletions, but looking forward and looking at the next quarter. What are the difference in terms of, how wine and spirits performs in this market, but then also in terms of how things may recover and regroup for the rest of the year? Michael?
I mean, certainly wine is underperforming, right? So, I mean, wine in the past 3 months, right? I mean, I have it down about 11% in the past 3 months. Spirits down a little over 5.2, as you alluded to, Michael, and down a little under 7 if you exclude cocktails, right? So you are seeing certainly an underperformance in wine. So our expectation is that spirits continues to outperform wine over the next 12 months or so. Although wine will recover, we are again kind of back to my more cyclical versus secular trend. But our expectation is that you have kind of low-ish single-digit growth for wine, and then you kind of continue with that. With an outperformance of spirits. So, we do have wine kind of picking up versus relatively low levels, and then, kind of that continued outperformance of spirits.
Chris, what are your thoughts?
I'll share in this a little, again, I'm thinking more like medium to long term and also sort of where we've come from historically. If I think about wine, a lot of wine formats were in more traditional formats. And interestingly, as we've seen a real growth of what I think are cocktails of all different types and new ready-to-drink products, I don't know that we've seen as much on the wine side that's really worked. Now, I'll have to say, I'm still very bullish about, what could be wine-based opportunities in the future. And where wine might have some unique spaces to play. So I'm still very bullish about that. But I will say it's kind of interesting if you think about, how consumers are drinking single-serve beverages. Historically, I thought when you thought about single-serve, it was a little bit harder maybe with wine because of some of the sensory components. You want it in a glass, et cetera. And so some of those accessible products that might more so be in a single-serve format were a little more out of reach. I think what's intriguing to me that I'm just going to share is, some of the data shows right now that most people take a canned beverage and actually, not most, but many take a canned beverage and actually pour it in a glass and drink it. And so I think if we think about that just as a, how is the consumer drinking? Where are they going to? The concept that consumers want the convenience of a can and maybe a single option of that nature, but actually are still okay pouring it in a glass, I think that suddenly opens up a lot of unique opportunities. And I say that's both for wine. I think it's also for, if you think about cocktails, that's a similar concept. If you talk about higher proof cocktails in a can, they tended to be a little hard to drink out of a can. If you think about how the consumers actually, what they're doing with that can, I think it opens up some really unique spaces.
Yeah, ready to drink versus ready to pour. Who knew that we'd actually have a discussion about that? So in terms of this market, specifically consumer behavior, what are investment groups by way of looking to place investments taken into consideration when you look at premiumization trends? And Kristen, we'll start with you.
I still think consumers, I'm going to go back on premiumization. I think right now it's been a little hard to peg just because obviously inflation has been high. People, are counting nickels and dimes. And so I think that obviously impacts how people think about spending on products. But the reality is I do think consumers continue to gravitate towards more premium products, and that really is the longer term trend that's still there. I think it's been a little bit bumpy, to be totally frank. I think if I look back to where we were in 2020 and where we are today, it's been an interesting path. I actually think we're in pretty good shape today, and I'm very positive about how I look at the future as we go forward from here. So I do think I will say in terms of different areas of opportunity that we look at, right now I'll say we've been a little bit more focused on no and low alc options of all different types. And I think that goes back to, people drinking better, really choosing to have a great cocktail on some occasions, also having other moments when they want to moderate, maybe have something that's not as high ABV, that's driven a lot of consumer behavior too. So I think we're mindful of that and really looking for different types of opportunities that appeal to that consumer in all different states that they might be in. Because the reality is I think consuming in wine, spirits, and beer is about coming together in celebration. So I think, we'll see a lot of different types of opportunities as we go forward from here.
Yeah, always focus on the calendar to see what's ahead. Michael, what are your thoughts on this slide?
I mean, a number of my thoughts will echo Kristen, certainly. A little bit of a different perspective as a distributor, right? Kind of not as a true investor, or kind of a little bit of an operator versus external, but 100% organizational looking at kind of call it more premium products, more luxury products. I think that Winebo as a distributor has been built for that level, for that price level, and for kind of carrying more premium products. So that is certainly very important to us. Consumer driven, certainly, right? So as we kind of look at no and low and kind of expanding that category for us, also a category that we are looking to invest in as a distributor, right, and kind of add incremental resource to kind of in that distributor mode. And then lastly, what we do really well is we invest with or kind of invest in brands with a lot of authenticity, right? Whether that's authenticity, as Kristen mentioned previously, with kind of family-run distilleries, smaller family-run distilleries, or whether it's authenticity with product, where product comes from, where it's sourced. I mean, that is a very significant piece for us, and for Winebo Spirits team, that kind of level of authenticity.
Yeah, and before we go to Kristen to talk about specifically as a venture capitalist, what Kristen's looking to invest in, Michael, as a wholesaler, some people may be scratching their heads saying wholesalers are making investments in products. Can you talk more about what that means and what an investment in a product actually entails?
Well, to us, an investment in a product is an investment in a relationship, right? So, when we talk about an investment in a product, we talk about an investment in relationships, right? So kind of speaking to some of that authenticity, we want to work with suppliers, that are not only authentic, but we want to work with suppliers that are obviously very passionate about their business, very passionate about their product, have a really good understanding of how this, we'll call it the distribution system or the three-tier distribution system works, has a really good understanding of how we work within that, we'll call it system. We have invested considerably over the past several years in our spirits team, right? We have a kind of a spirits specialist team at Winebo. We had recognized that kind of spirits growth relatively early on and started investing in spirits. and have a very significant size spirits team across the country in both our import portfolios as well as our wholesale business units. So, when I say invest, we very traditionally, from an operating perspective, invest in people, invest in infrastructure, invest in product, invest in, kind of warehousing. What we also do, Michael, is we also, invest with that supplier to aid in that initial sales growth, right? We will, start mechanisms with that supplier to kind of, whether that's kind of fueling incentives and trips, education. I mean, education is incredibly important to Winebow. We have some really strong educators in this business that have the desire to and educate not only the retail and restaurant customers, but also the consumer. So as a distributor, it's not a very traditional, we will spend, $1 for, X% of your business. That is not, what we normally do. It's not normal course of business for us. Some of that is kind of regulatory, has some regulatory issues that, we don't want to step on. But, so as a distributor, it's that non-traditional investment is the investment in the process, investment in the people. It's an investment with the supplier, to kind of really make that product work in the marketplace.
It's really interesting. Kristen, over to you on that. How are you making an investment, and what does that mean when you do make an investment in a product?
It's interesting. We'd have a diverse team really from around the globe, and some unique competencies that we can bring to different businesses that we will partner with. We really are minority investing. If I think about what that means for different players, we're really looking at some players who are highly differentiated in the spaces that they're in, and really looking at how we might get involved in their business in a more meaningful way and help them. So I think there are some interesting spaces we are particularly focused on. Obviously there's beer adjacent. We are a business based around beer, a beer-centered business, although we sell non-alc beverages as well as food. So we have a very diverse profile. So I think if I think about where what we're looking at, which I think is sort of one of the questions I suspect is out there, and maybe what's changed, which I think is an interesting question for us, Michael, was changed from before to now, in terms of how we view investments. I'll say that competitive set piece in a high inflation environment, where cost of capital is really critical for us. We want to make sure we get behind brands that we look at and say, yeah, this isn't one of many that's just like X. This is something that's really unique. We do see quite a few that are standing out in that way. So the other one I thought I'd just share, and this is more just about, what's changed in the environment. I think if I go back in time, there were a lot of brands that launched and said, hey, I'm going to go build my business. I have a go big plan. Being profitable, it's not so essential that I show when I'm going to be profitable. I think that's probably a really big shift right now. When cost of capital is high, it's helpful to have a good sense of like, how could one become profitable over time? And what does that look like? Why does the business model today, even if it's not perfect, how's it going to get to a different place? How might you bring down COGS? So we tend to focus a lot on that. And then the last one I'm going to mention, which is just kind of interesting, I see incredible entrepreneurs out there with really innovative ideas. I think some of the most investable opportunities as of late have been ones where there's someone involved in that business as well who's really financially grounded and helpful in terms of allowing that entrepreneur to pivot when they need to pivot into new areas, go out and really look at new types of opportunity, new venues, and be super creative. And yet similarly have somebody who's really looking at that and saying, okay, what does that mean in terms of how we finance that? What do we test now? What do we go big on, at what point in time? Those are things I'm probably really thinking about today in terms of the types of businesses we get involved in.
Yeah, Kristen, let's talk a little bit more about that. So you're looking at not just the product, you're looking at the people, you're looking at the team. Tell us about that balance, that perfect mix.
Yeah, I mean, I don't know that there's a perfect mix, and I think everybody gets there a little bit differently. But I will say, like, even as I go back to, where we were in March 2020, versus where we are today and what's happened over the past few years, whether or not it's supply chain issues that people faced at different points in time. Can they get their product co-packed? How is that happening? I mean, there have been a few bumps. There have been some significant, I'll say, bumps on all going in a good direction, but I think some significant bumps. Weathering some of that stuff, it is really helpful to have somebody, either someone who's on your board or someone within your business who's a financial person that you can toss around ideas and say, how might we approach this? Might we get a little creative? So I do think the other one, I'm just going to share this, kind of interesting just to think about this environment right now. We see a lot of really creative new to market products that are coming to us. Many of those are quite small today. If I think about, the challenge of what's gone on with interest rates, cost of capital, et cetera, it's really hard if you were halfway out the gate with a plan that was go big, spend big, and then you're shifting. So I think that's been a little bit more challenged. Then I'll say some people who had some early stage brands maybe hadn't quite gone as far out the gate yet. And so I think those players have interesting opportunities that they can look at on a go forward too. So they don't have to focus as much, I'll say, on like really kind of reining into things that allow them to generate cash.
Yeah, and on that note, the come out of the gates, screaming, yelling, go big, blow it all out. Would you advise the industry to kind of not execute on a plan like that in this marketplace right now?
I wouldn't say don't execute it on. I wouldn't say don't execute on it. I think the more interesting thing I've been thinking about is, really kind of two plans. You want to make sure when you have capital that you're testing things. How does your product look on shelf? How do people consume it? What are venues that you can take a lot of knowledge from watching how people drink your product, how it's presented on shelf. I think it's a little more on like get those proof points and get a real clear picture of how people are using your product before you go and you spend big. I'll just say very clearly though too, some of what drives this in this industry are really creative thinkers, and you have to be comfortable saying, okay, I see what's going on. I have a really innovative product. I'm watching how people are drinking. I've tested it a little bit in the following locations. I have some proof of concept here. Like, let's go. Like, I still think there's some great opportunities from that standpoint. And I would never want to pull back an entrepreneur from thinking that way, because I think that is what drives innovation. That is what drives some creative products that we see in market. But I will say it's a little bit helpful to have some of that thinking sort of grounded in, how do I go about testing and creating a proof case? How might I do that in a focused area before I really blow this out of the water?
Yeah,
I'll say.
I will add a few things that hopefully augment Kristen's thoughts. Number one, I think from a distributor's perspective, and certainly a CFO's view, have realistic expectations. Have realistic expectations of what your brand has the ability to do in the marketplace, and come with those realistic expectations. And that kind of goes to having some sort of someone financially astute kind of in your corner or on your board. Have a little bit of grit, right? Have a little bit of persistence and grit to maybe, there certainly is there are some challenging times out there, and we need to kind of work through them as an industry together. And so have that little bit of, have that little bit of grit. But, I would, echo all of Kristen's thoughts, certainly. And she's right. You do not ever want to, kind of, stamp or kind of, beat down an entrepreneur for having big dreams at all. But you do have to kind of go in with a little bit more, sometimes of realistic expectations.
Yeah. Mike,
Hey, Michael, can I add something else too? I've seen people really pivot. I mean, it's interesting. I've seen a lot of people pivot their business models in really creative ways. So, I think there have been products where you go out and you say, okay, I think the consumer is going to really You know, I've taken away these sort of trends that I'm capitalizing on, and I think the consumer's going to want X, and maybe they want X, but it's a little different than you thought, you know. So I've seen quite a few people pivot in different spaces, and some, you know, I think there's been a real push towards flavor forward profiles. I tend to think a lot about that. What does it mean if you're to have really good ingredients, things that might be better in terms of the ingredient panel, but similarly be flavor forward, you know, not super high sugar, but flavor forward. I think it's interesting to see what's coming up in that space. But I think entrepreneurs, what is incredible about the US market is how supportive I think the ecosystem is for entrepreneurs and for innovation. And I think in certain respects, you know, if you're small and running a small business, you're really well equipped to pivot. And I think we've seen people do that really effectively. And I would say that's actually something, if I think of entrepreneurs that I think long-term can be successful, you know, being able to pivot business models is pretty important.
Yeah, and Kristen, there seems to be you know, more groups out there, more support, great networks, great resources. And to your point, this industry, I think, fosters a lot of innovation and brings a lot of emerging brands to market because there's great mentors, right? It's really a very welcoming industry, and that was one of the most remarkable things for me to understand about it. But there's also a lot of, you know, perhaps less valuable resources. So what types of resources, advice, mentorship, when someone comes to you, do you offer them and do you direct them? And what types of tools are out there to help folks?
Well, I just have to share, you know, my background as well. I was with First Beverage as a managing director there. And I obviously came from the wholesaler world, having spent many years with people like Michael and many colleagues across the WSWA organization. When I think about different resources available, I think those resources can be super diverse in terms of what you need at different points in time. So I think there have been a variety of different players I've seen that are on cap tables. And I think as I go back a little bit to what I mentioned, and sorry to lose a little track there of where I was going with this, if I think about being a venture investor initially, and being a board member, I probably initially way back when thought, well, yeah, you're in board meetings. You know, realistically, being a board member, board observer, you're having like weekly conversations with people, and largely because they're calling you and saying, hey, I'm contemplating X, or I'm thinking about Y. What do you think if I do this? What do you think if I do that? So I think sometimes you can get really engaged people from your cap table as it exists, both as kind of board members and board observers. I think there's also great advisors that are out there. I think what you want to focus on is making sure you have really diverse perspectives. So every board I've ever been a part of, I've actually seen really different viewpoints and perspectives that were really helpful to the entrepreneur. So I'd say if you don't have that today, if you don't have kind of some of that diversity across your board of perspectives, it's a good thing to have. And it definitely helps if you're in the midst of you know, trying to weather sort of a changing landscape, and maybe, you know, unforeseen situations, right? Unforeseen situations. So,
Michael, what about
sorry
you?
to lose track a little bit there.
It was great. No, I think as Kristen is suggesting, time and consultation, right? I mean, you know, you want to be able to spend time, whether that's kind of internal constituents or external, right? You want to be able to spend time with somebody, kind of invest your time and resource, you know, into, you know, kind of assisting them or helping, you know, that person or that business for whatever they need. You know, kind of utilizing some experience I have externally, right, is often something that I think a lot about. I think that, you know, often the wine and spirits industry tends to be a little bit too insular. We need to look outside the wine and spirits industry and kind of understand how other industries distribute, and how other industries import, how other industries sell. And I think that's something that over time that, you know, we need to kind of bring. Right. So kind of looking outside the wine and spirits industry, looking outside of, you know, even beverage, right? I often, kind of, make, allude to industrial distributors, or, why isn't this like any other distributor? And that's, kind of the CFO and me talking. But, I think that we need to make sure that we understand how other industries work and what makes other industries incredibly successful. And then we can certainly then tie it back to kind of wine and spirits. But time, resource, really understanding and stepping outside of wine and spirits is what I would say.
Yeah, I
Hey,
think it's
Michael, can I add a little bit on that? I think it's interesting if I go back like 5 or 6 years ago, or maybe a little bit longer. Boy, time flies, right? Maybe a little bit longer. I really, I really viewed bev alc as being separate and distinct from non-alc. And to Michael Monzo's point, we saw different types of investors typically in non-alc beverage. Many different institutional investors, and probably fewer institutional investors in bev alc, but maybe some wealthy individuals or some family offices that were more really, got behind entrepreneurs. So, but you rarely saw more than one institutional investor in a bev alc opportunity. I think that's changed. I actually see a lot of people today who are investing in both bev alc and non-alc. I still say it's probably a little more skewed non-alc, but I've been really surprised to see sort of new groups who have beverage alcohol holdings in their portfolio. So I think, as we think about how to get kind of diverse voices, diverse perspectives, you can get that through different investor groups. And to Michael's comment, we're drinking all different types of products in many more occasions than we ever did before, and not really confined. So having a little bit of out of box, having a view towards what people are drinking in other spaces, I think is very, very helpful. And it's actually, I should mention too, we have a very diverse business, as I mentioned, that includes, soda products as well. And non-alc products of all different types. So I do think it's a little bit unique for us. Kind of globally, we do have a lot of that perspective at Asahi.
Kristen, not to read into what you said too much, but does that mean that brand loyalty is less significant today than it was, say, 10, 20 years ago for consumers?
Oh, I don't know. I'd have a hard time answering that question. That's an interesting one. I'm not sure. I'm not sure exactly how to answer that one. I do think we have incredible brand loyalty, and even if I think about products, premium products across our portfolio, there's incredible loyalty to those products. And I think we've historically seen that very much so in spirits as well. So I do think we're willing to try things, and we like discovery. But I do think we have definitely still had a good amount of brand loyalty. So I wouldn't dismiss the brand loyalty part. I think that's still very, very strong in our industry. I think wine's always been a little bit more about discovery, which I think is kind of an interesting dynamic, trying new things, discovering new varietals, new types of beverages. So I think it's a little bit different in wine, maybe in some of the other spaces, but broadly speaking, I think we still do have a good amount of brand loyalty, and I expect that to go on into the future.
Michael?
I'm glad you didn't ask me first, Michael. She's right. I mean, it is a challenging question, right? So I kind of approach that as a, kind of wine and spirits, industry member, and then as a consumer. But that all that is certainly true, right? I mean, there is, I believe, still some brand loyalty. I mean, I kind of think about myself as a consumer of wine and spirits. I mean, I do tend to kind of gravitate towards those more familiar or my favorite-ish brands. But Kristen and I had this conversation in prep of this call, I think last night. If you looked at kind of I think I was talking about my wine and spirit shelf, right? In my kitchen, there are certainly more brands on that shelf today than there were 3 to 5 years ago, right? There are more spirits brands on that shelf today than there were 3 to 5 years ago. There are more kind of wine brand. So, while there is some of that brand loyalty, I think as we're both alluding to, it is lessening it a little bit.
Yeah, and I think probably the proper way to couch it is you've got your core brands that you always gravitate to, but you're always open to exploration. And as new products come onto market, I mean, just even the back bar behind me, you've got craft brands amongst brands that have been, around for hundreds of years. So I think that's not only the marketplace, but where the consumer tends to go, just kind of drinking across categories and exploring new brands, no doubt.
I do think I was just going to mention something which is kind of interesting in spirits. I think consumers care about how their products are made. I think that's kind of universal. And so it's interesting if we really think about the spirits industry and what's happened over the past few years. In Kentucky, you're now going and doing distillery tours in different places. That's really been interesting to me, right? We really never saw that type of a thing at the scale it is today, as much as we did in, let's say, wine. So I think there is a lot of passion around how is this being made, and consumers really embracing different brands after learning more about how the products themselves are actually made.
Yeah, and that's actually the perfect segue because I know we have a lot of craft brands in attendance who are waiting for this question. So I'll try to segue from what you just said, Kristen. So, in terms of telling your brand story and consumers caring about how products are made, that's important. But that leads us into our next question is when you look at what you're looking from a product perspective to invest in, right? What do craft brands need to do not only to gain your attention? So, Kristen, you as a venture capital investor, Michael, you as a valuable wholesaler partner, what do they need to do to get your attention, to get your time, to ultimately get your money in order to move forward? And we'll start with Kristen.
Yeah, I was just going to say, I think the one thing that I tend to really focus on is like, how is this different from everything else that's out there? Yeah. And what's the thinking behind how the consumer is going to evolve to the space that you're operating in? I think if I go back in time, if you're looking at a product, and this is more my prior role versus my current role, but if you're looking at a product that's a vodka and somebody comes in and says, well, it's really different. I'm going to be $1 cheaper than so-and-so, and this is my great product. That's a hard sell, right? Like, I mean, is that really that different? So I think that's one of the things that's probably the most important is how you tell the story about how your product itself is different, is really meaningful, and important to us, and how you think about the competitive set around you. There are a lot of, different types of products that are out there. I think it's important to really distinguish like what's going to be unique about what you're doing. So I tend to focus a good amount on those two things. I do focus a lot on the team. I think it's, there's some interesting challenges always in terms of trying to do something from scratch, and launch innovation. So a lot of it's really like, how does the founder think? How do they weather things that are really challenging? Which again, as I mentioned earlier, like I think founders are incredibly good at pivoting, at really kind of creative thinking, more like thinking of new ways of bringing their products to market. So I look at that quite a bit. And then I really look at the business plan too. I think it's easy to say, I'll use as an example. It's easy to say the US is an enormous market, so my product's going to be like X in 2 years, right? I think it's important to really ground that a little bit in terms of like, how does one actually build where you're going, right? How are you going to build it? And I've seen some really creative ideas. We went from a place where I felt like historically you would say, well, you build your brand on premise and then you move to off. Would have been a historical way of thinking. I see a lot of people being really specific about unique channels that they're going to go after, and unique ways to inexpensively market their products.
Yeah, I'll pick up a little bit on the business plan idea. I mean, I would kind of suggest execution of a business plan, right? I mean, the ability to execute, the ability to operate a business. I think, kind of from a CFO's perspective, what I would look at is, the quality of execution and the quality of people that are executing, right? To kind of look at that management to see, okay, is there a finance person in the room? Is there some sort of operator in the room? Do they have adequate personnel? Do they have adequate salespeople on the street? Do they have, kind of resource behind this to really make this work? Do they have that kind of persistence to really make this work, right? So from an operational perspective, I would say that execution of that business plan and kind of prior experience with execution of that business plan, would be super important to me, right? I think from a competitive set perspective, or from that, kind of, a niche idea perspective, I mean, is it really interesting, right? Is it nichey? Do they command, do they kind of command their space? Is it a differentiated product? Right. Oftentimes, we talk a lot about at Winebow, we talk a lot about, how do they do in their home market? Right. I mean, how do they do in their home market? How do they, do they sell well? Do they have a presence in their home market? We talk a lot about that, right, as kind of a little bit of an indicator of whether they could do, whether they could be successful more broadly, right? And I think one of the things that we haven't mentioned, that's certainly not an area of expertise for me, but what is their social media presence like? How are they brand building on social media? How are they doing those non-traditional marketing channels? What is that like? Are they successful there? Right. So I would, kind of couch all those as kind of more operational, characteristics, kind of what we're looking for.
Yeah, I think that's sort of our mantra at Access Craft is own your home market first, which gets us into cost, right? Because that tends to be the lowest cost opportunity to get out there, Kristen, to your point, to test things, to learn about your customer, to learn about your brand, your price point, all of that. When do the two of you raise a flag when you see cost of production being too high, knowing right now cost of production, cost of glass, all of these things very high? What are you looking for? When do you start to be concerned about a brand's cost of production, and what should people think about?
I tend to think about it's important to understand what industry norms are for different sets of products, and to also really have a picture of your own COGS. What do they look like today, and how specifically are those going to evolve? There are definitely ways with scale that you would see your COGS come down. But I think it's more about the thinking behind something more than anything else. But I'll tell you, I mean, where you don't want to be is really far away from what an industry norm is, and not exactly clear in specific ways on, what happens to your product at what points in time that changes what that COGS picture looks like. So I think that is really, it's an important fundamental component for anybody's business plan, to really have a good grasp of like, how is that going to evolve over time?
Unquestionably, right? I would start with fundamentally understanding what makes up your cost of goods sold, right? And fundamentally understanding the trends and kind of the underlying trends and kind of the components of those cost of goods sold, right? The raw material trends, the trends in finished product, right? Understanding what really makes that up first, I think, is a really good first step. And it sounds a little bit trivial and maybe a little fundamental, but that's really key. Really understanding what's there and what makes it up and what really drives it, I think is obviously super critical. And then I'm just going to just kind of go one level deeper, or sorry, forward, which is, understanding how to price your product in the marketplace, right? So I think there needs to be expectation of, where your product sits in the marketplace, right? And as we know in this industry, pricing often works backwards from the shelf, right? So you kind of think about that, and then understanding, the chain and understanding kind of the distributor's expectations and what you're getting for that price or the distributor's cost or your price to the distributor, and really kind of thinking about that holistically, right? So first, initially understanding your costs from a fundamentals perspective, what the distributor is going to charge you to sell the product, and then where it sits on the shelf, and all that really needs to be taken together.
Yeah.
I do think, and this is broader than really just beverage alcohol, but if you think of a set of products that are out there, that had more of a D2C focus. And I think we saw a lot of this more so during COVID. You had businesses that, or even on-site sales that had on-site sales that they were able to do in their physical location. I think that awareness of like, what does that mean then when you go a little bit bigger? What happens to your margin as you go a little bit bigger, and making sure you're grounded on that is really important. So, I think I see that a little bit more too in non-alc. If you have, there are businesses that are very, very significant in size that are pure D2C plays. I think that pricing point becomes really critical of exactly what do you need to bring it, out more broadly, to a broader array of consumers in more traditional retail locations where they're, purchasing products.
Yeah, we're coming up on the hour, so I've got two more questions I want to get to. The first one is data. I know that both of you use a lot of data, and we've even talked about competitive sets. Do you have brands that come to you who just don't have an understanding of their competitive set of data? And how does that impact the pitch? But more importantly, how are you using data, and how should these brands coming to you be using data in preparation for this engagement?
Maybe I'll take the how are we using data, or how are you using data? I think the SIP source data that WSWA has kind of recently released has been a game changer for us. And I think it has a lot of different avenues for us, right? So as CFO, I talk to external constituents a lot. Shareholders, lenders, investors, prospective investors and lenders, et cetera, et cetera. And what they really want to understand is your performance relative to the industry. And for the past, year or so, I've been able to, explain to them, and they've been able to understand what the industry trends have been, what the industry dynamics have been, and that is entirely due to the SIP source data, right? We have never had that kind of data at the distributor level, and it's been exceptional for me externally. I think, as I've told Michael before we started this call, that next step is to understand not only volume data, but sales data or revenue data, kind of inclusive of price. A lot of these volumes have been down in those high single digit, low double digits, but pricing in some cases have been up, that we'll call it the low to mid single digits. So some of that volume has been offset. Internally, we use it as a benchmark. I mean, internally, we kind of utilize it as a benchmark. I think one of the things that SIPSource does very well is, they also regionalize their data, right? If you look at the regional data from SIPSource, you really see some of that regional differeces throughout the country. If you look at the West underperforming, the East considerably, right? If you look at the Pacific region versus the Northeast region, right? Some of that intuitiveness that is out there is showing up in some of this data. And so we often benchmark our wholesalers and as well as internal and external, kind of versus that SIP source data. And then we also use it with suppliers, right? So Michael, you had asked about kind of supplier expectations and how suppliers, what their expectation is of that data. It is, as I understand it, talking to suppliers from our supplier relations world, it is eye-opening for a lot of suppliers to truly understand what the broader trends are. Right, it kind of goes back to my inline, or kind of have real expectations and have someone to have real expectations out there, because the suppliers and wineries and the distillers need to understand what the industry is experiencing, the broader industry is experiencing, and how are you performing relative to the industry. If we are underperforming the industry as a distributor, then there certainly needs to be a lot of pushback, and we hold ourselves accountable and attempt to outperform the industry. Or out from the category, right? And kind of however we want to slice it. But there needs to be some sort of relative metric, and the relative metric for us more recently has been that SIP source data.
Good to hear.
You did not pay me to say that, by the way.
See a Venmo text message.
Yeah, that's right.
Kristen?
I'll share. I'm a little more focused on kind of medium to long term what's happening. That's really where our funds focus. So I'll say I'm really taking a bunch of different data sources and trying to triangulate, like, where do I think the consumer's going? So I do also, in addition to data that is backward looking, I'm really also looking at consumer data that makes me pause a little bit. And I say this about bev alc and non-alc. It tees up some of my own thinking about, like, how are people drinking different types of products in different spaces. So things like what I mentioned, you know, if a lot of people take a single serve can, and they pour it in a glass, you know, that's kind of interesting, right? Like, that's something I hold on to, which is more about consumer behavior. And it grounds, I'll say, some of my thinking. But I do think the more data sources you have, the better. I do think it's really helpful to be able to have a more holistic view of the industry. And I'll even say, as we think about, you know, a space where we're drinking in many more occasions than we ever did. And similarly, sometimes we're moderating, so we might be having non-alc beverages as well in between things. I think it's really helpful to have data that's broad and an understanding of the broader market. And really thinking about what's happening in bev alc and what's happening in non-alc, true non-alc kind of functional beverage, and how are those two, you know, getting a little closer together in some spaces.
Kristen, you've gotten the chat room just going on single serve, and a lot of folks, if I'm going to summarize the 7 to 10 questions I see here, it says, you know, essentially single serve, very interesting option. You know, various companies exploring this route. Specifically thinking about finances, I'm wondering if you could shed some more light on the financial viability of single serve or even smaller format options for a large consumer base.
Listen, I think there's some interesting innovation in single serve, right? And if you going back, I'm not quite sure exactly what the question is on that front, Michael. Do you want to repeat it for me so I can
put into one? Yeah, I guess, you know, in terms of the single serve, you're saying that it's obviously really exciting, a lot of stuff going on there. I guess people are asking about the financial viability of single serve when you compare it to, like, a, you know, a larger format.
Is it profitable time? Is that the question?
Yeah.
Sorry, Michael Monzo, what
I was
did
gonna
you
say,
say?
is it, I mean, could I surmise from that, you know, is the question, is it profitable over time? Like, I mean, will it really work over time? Is it profitable? Is there too much competition? Is there too much product flooding in the marketplace? You know, can it be done profitably?
You know, I've seen interesting business plans, I'll say, where I think people are doing single serve profitably. You know, what that becomes over time, I think, is an open question. But I also will say, I think the stuff that's probably the most intriguing to me that I've seen more on the bev alc side are things where people own a specific cocktail profile, right? So some of that stuff too, I think there's some interesting opportunities for innovation there.
Okay. A lot of questions about do you need to have multiple SKUs or expressions to be successful versus one to start out with? That's kind of a jump ball question.
I mean, it's, again, distributor's perspective would be, you know, one really good strong SKU and you know, the distribution is happy. You know, so I do not believe you need to have, you know, kind of multiple SKUs. You know, one always doesn't work, right? I mean, I think you need to have, you know, kind of fewer SKUs in my view.
I can only speak to this probably from more of my prior experience. I'll say, like, on the spirit side, I think you typically have seen people try and focus on like 3 to 4 SKUs. You get beyond 4, it's a little hard, and it varies a lot based on the product that you're actually out there with. I do think people have been able on the high end to leverage some kind of limited release items that they might do, which I think is interesting. You know, if you have things that are highly sought after, that's kind of an interesting, or things historically that might be seasonal in nature. Those are kind of intriguing to actually have in market. But again, like, I think most people are really trying to focus on, you know, what's the core of my portfolio. And I think if you're trying to have too many SKUs and be too many places, sometimes you sort of lose, you lose some of those consumers by not maybe putting forward just your best SKUs, right? Your best products that you think have the greatest appeal.
Yep. Okay, one more question. And after this question, people want to know how to get in contact with the both of you. But here's the last question before you decide whether or not to share your contact information. What 3 metrics are you both independently looking for? So, Kristen, you as an investor, Michael, you as a distributor, when evaluating a new partner?
So you want 3 financial metrics from me, Michael? Is that what the question is?
Yes, thank you.
No, it's fine. I think, look, I think initially what I would say is, we are looking for, sorry, I just gotta chat. No, sorry, it's just, one of those. Look, I think we're looking for, expectation of kind of gross margin, right? Kind of where this product will sit on the shelf, right? And how much money that we can make as a distributor, and how much money we can then, kind of collectively invest in the product together, right? I mean, a lot of this, a lot of the growth comes from investing together, right? Kind of investing with our supplier, investing together, and how much money we have to, kind of utilize, to kind of take this product, to kind of new volume. And that's certainly something that we focus on. Right. And I also kind of I'll kind of go back to something else I said, which was, we just want to make sure that, together we can build this brand, right? That supplier has expectations. They have the right expectations for the kind of brand, as well as they have the right, kind of supplier-led investment in people, right? And I think that is also, kind of truly important as well. I don't know if that was 3, but
I was just thinking, Michael, it's really hard to nail down just 3.
Yeah.
I mean, I will say, like, on our end, I think some proof of concept is important, and a lot of that's like velocity. So even if it's in a small footprint, how is a product very distinctly turning when it is on shelf? How is it selling in specific areas? Those are types of things that I think would be really important for us to understand and get our arms around. But more broadly, I'm really focused on kind of what the bigger picture plan is. It's hard to do something if the broader financial plan doesn't really make sense. Like, you kind of can't build up, like, how do you get to that revenue? How do you do that with resources of X? Is something else. But I think, honestly, a lot of it is more like, I'm sometimes less focused on so much the distinct numbers as much as it is the thinking that one has put behind them. And how much time and attention have they taken to, like, really thinking through those components.
And the one thing I will add, really kind of maybe taking a page from my prior career book, is I've always thought an organization or a company's ability to generate cash is critical, right? And oftentimes we talk about revenue growth, right? Especially kind of we'll call that newer stage, but a company's ability to generate true cash is absolutely critical over time, right? I mean, successful companies generate cash, right? Successful companies know how to manage their working capital. Successful companies know how to invest in capital expenditures, right? Successful companies know how to generate cash, turn that, kind of revenue into cash, right? It's not always about sales. It's not always about revenue. And that's something that I preach a lot, right? And again, kind of taking that, kind of public equity investor stand, but it is always about, generating higher levels of cash, because when we generate higher levels of cash, we can reinvest in the business, and then we continue to expand, and we can grow. And I think that is something that's often underestimated by people, kind of especially early on. But if you set your organization up to generate cash, you will begin to start to have that mindset over time when you get out of that investment period.
Yeah, makes sense. Okay, people want to get in touch, pitch you, send you decks and PowerPoints. What do they do?
I mean, I'm certainly available on LinkedIn, right? So find me on LinkedIn, and I think it's probably the easiest, kind of in my view. I mean, Weinbo, I think if people are aware of the organization and kind of certainly aware of the email cadence of the organization, it's just michael.manzo@Weinbo. And so that's certainly welcome as well.
Perfect.
Yeah, I'd say on LinkedIn too, I'm happy to connect with people on LinkedIn. And again, like really curious to see what business plans people have and what they're looking to do in market. I remain really, really bullish about the opportunities and the innovation that comes forward from individual entrepreneurs. So please do reach out.
Yeah, Kristen, in my SIP source capacity, I'm looking at just the raw data. So when I need a pick me up, I'm going to be calling you like better about things. Hey, listen, first of all, thank you so much to both of you for being with us today. I enjoyed every conversation leading up to this conversation. I feel like I was a bit all over the place because we wanted to talk about so much and we only had an hour and we're already 10 minutes over. So let's agree to continue this conversation maybe on another webinar, maybe at Access Live in Denver, Colorado next year, shameless plug. But certainly we're going to be really proud to feature the both of you in the next volume of the Access Craft Playbook, because this is a tremendous resource. This is the most requested topic to be discussed because it's the most challenging and it's the most important. And the two of you are not only really well qualified, but just really approachable and break things down to layman's term. Even even a Marine got it today. So I really do appreciate it. I want to thank those of you who attended today. Thank you to the WSWA team, the board of advisors, and everyone who makes this possible. And a big shout out to the Access Craft wholesaler advisors, as well as brand representatives who motivate us to do this almost on a monthly basis. But again, volume 3 is going to be dropping soon, so be on the lookout for that. Michael, Kristen, thank you so much. Have a wonderful day. And again, we appreciate you both. We'll talk soon.
Thank you, Michael.
Thanks so much.
Bye, everyone.
Bye, everybody.